Jack, good to see you today. For you and for your clients, how much is riding on what Nvidia has to say about its future?
Yeah, I mean, the fact is that Nvidia has become essentially a bellwether for the S&P 500. But at the same time, Contessa, I think what we're hoping for and what we expect is once the Fed starts to ease, that should pave the way for more of a broadening of the market. You know, keep in mind that Nvidia and the Mag 7 led the S&P dramatically higher in the first half of the year, but really since the middle of June till now, it's really been a market performer as more and more investors are anticipating rate cuts.
And how are you positioning your strategy for tomorrow, depending on what happens with Nvidia? I mean, is this a story that you're already telling clients that the rotation away from Mag 7, away from AI and big tech has already begun and should continue?
Yeah, that's really the narrative. I mean, we're not going to position the portfolio day to day. I mean, with 55 billion, it's really tough to do. But I will say that if you look at the big drivers of return over the last 2 years, it's really purely and simply debt to EBITDA. The higher the debt you have to the cash flow that you generate every year, the worse you are. So, for example, if you look at large cap stocks, they're going to be between 4 and 5 times their EBITDA in terms of debt. Small caps, 4 to 6 times that. The Mag 7, less than 1 time. In other words, these companies generate so much cash, they could pay off their debt in less than a year. And that's really been a benefit to those companies as rates are high. Once the Fed starts to ease, and virtually every time the Fed eases, the 10-year Treasury moves down in sympathy, financing costs start to free up. Who's that going to benefit? Those higher levered markets, sectors, and companies.
So, Jack, what is spooking the market today? Is it Nvidia? Is it something more fundamental than that? Because it's not just the tech stocks like Supermicro that are down. It's the Lululemons. It's the retailers that are down. They all have specific reasons, I suppose, behind them. But what's spooking the market? And specifically, I'm looking at a chart of the Dow there, down 0.8% now. It happened at 11 o'clock. Boom. Things turned.
Yeah, I've been watching, my screen, really the only sectors that are up as the dollar and tips and some of the bonds, a portion of the bond sector. But I did notice that tips, for example, is outperforming fixed, which would suggest to me that inflation expectations perhaps are rising, even though real rates, that the underpinnings are still pretty high. So perhaps there is some indication. I know that consumer confidence has come in a little bit stronger than expected. Some of the other things, though, perhaps there's some inference of strength that is causing some concern, particularly on the spending and inflation front.